you have a developer or GC that's not organized or doing what they're supposed to do, it's a trickle-down effect. So I think it's important for the sub or the GC to really understand the bigger picture on the project. Is it a viable project? What the construction process looks like, what municipality or the state that you're in is very important. And again, the subs and the GC are subject to a whole lot of things that the developer owner have to do. And the bank is, they're the keys, they're holding the keys to the castle. They're the man with the gold really makes the rules. So until you get what you need, the bank's not going to fund the draw, and then the underlying individuals aren't going to get paid. So a lot of times general contractors will have means or stop lines of credit.
Welcome everybody to the next episode of the Construction MF'ers Podcast. I'm 𝗕𝗶𝗶𝗥, CEO and founder of Mobilization Funding, and today I have a friend with me, someone I see every single morning at the gym, who also happens to be an expert in banking, commercial real estate, and all things construction related and banking related. So I want to have a special guest on here today who can talk to you about those things, and his name is Vince Chillura. Welcome.
Thanks, Scott.
And Vince is from Valley Bank, who is near and dear to us. They're a great partner of ours, been instrumental to me personally and professionally, and you have a big part of that, dude. So thank you very much.
Thanks, Scott. Yeah, last time we chatted was during PPP, and I was wearing a ball cap and I think a t-shirt when we had one of these conversations. So it's nice to be dressed up and be a little bit more serious.
Yeah,
so.
You had those fancy headphones on last time.
Yeah, I was sitting in my echo chamber office, and I think I was the only one in there on a Tuesday afternoon in the middle of COVID. So this is a little bit more comfortable. I like this a little bit better.
Well, you guys were in a little bit of what I would call crazy state at that point in time, and you guys were at the epicenter of it. But you were also awesome, and you brought a lot of contribution last time, telling people how to navigate through that for themselves. And so, thank you very much.
Happy to.
Getting your finances straight, your business finances straight, your banking straight at that moment in time. Back in, what did we do? Probably had to be March or April of 2020.
Yeah,
it was. Yeah,
right.
I mean, we were right in the middle of it.
Right in the middle of it.
And you did. That was the first one you did, and then you did PPP.
Yep.
It was like two.
Wild times.
Well, obviously we have a lot of construction clients, lots of manufacturers, fabricators, all of whom at one point or another struggle with trying to figure out how to engage into traditional banking. And one of the things we spend a lot of time doing at MF is helping customers navigate that in our world. Like, how do you get banking? How do I get to a traditional line of credit? What's my best way to engage? So I figured it'd be no better to ask you to start off right there is, what is the best way for a business owner at any stage to kind of plug into a bank and start a relationship?
Yeah, it's an interesting question, and most banks approach it the same way, right? You want folks to be organized, you want a certain level of financials, certain caliber of reporting. A bank is, we are a highly regulated institution, so we have different regulatory agencies, and we're really lending out deposits, so we have to protect that money. So we can't take a lot of risk. So we need to understand the predictability, the viability of the business, and then the people that are behind it. So the more organized you can be, the more organized the business can be, and really getting their state of affairs, their finances in order, the way they report it, what level of financials they have, diversifying income streams, and really, again, just being experts in their craft is important. So, we look at it from all angles. We analyze the character of the individuals behind the business, and then obviously the financials and the predictability of those financials.
So what's the process that the bank's going to go through to analyze someone's character or their financials, like when they first come in? Like, someone typically, when I'm asked that question, Scott, what do I do? Like, and I'm saying, well, do you have a relationship with anybody now? And they say no. I'm like, okay, well, the first step is start that. And so as you just described, those things you're going to look at as they're starting.
Yeah.
What is the best what is the way in which the bank goes about doing that?
I think the best way to start, to approach an institution is to start the relationship. And in this environment, and the way I've always approached banking is it's a relationship style approach, right? There's a well-rounded approach that the bank takes in terms of understanding the individuals, getting to know them, their process, et cetera, et cetera. So it's really a long way of saying, opening up an account and getting to know your banker is really important. It's a relationship style approach. There can be blips, there can be hiccups, but if they're explainable and you can sort of work through those, and sort of how the individual performed in a tough situation is important, right? Mm-hmm. So it's understanding the people and the relationship style approach that's really going to be helpful. There are different programs the bank offers. There's, we mentioned, we talked about SBA before. We've talked about traditional small business lending, and a certain style client. It just sort of depends on who you are and what you do. That would help dictate where you're placed within the institution. But again, it all starts with the relationship, and something as simple as opening up an account or having a consultation meeting with the banker, and continuing to educate is really important. It's a great way to start.
So is it better for someone to kind of wait till they have all of their stuff together, like really good financials, really good everything, to get a relationship started? Or are they better off start and allow the bank to be part of their education process, or actually is it better to let the bank watch them kind of grow up, so to speak, or get organized, or is it better for them to show up ready to roll?
Yeah, I don't think there's any perfect or set way to do it. I think it's tailor-made given the situation. I would say that our approach and Valley National's approach is let's get some accounts open, let's get to know you. So you may not have everything in perfect order, right? Mm-hmm. But if you're housing your accounts with the institution, the bank can see the activity, and then 12 to 18 months down the road, you become appropriate for financing for whatever the situation is, right? If it's a line of credit, if it's a term facility. There's not a whole lot of benefit by banking with the money center institution, right? The big dogs that we all know of. They have set programs. If you don't fall within a certain box or a set of parameters, you're excluded. There's not really any questions asked, and you're effectively a number. Most small to regional institutions would take a little bit different approach, right? They want to understand their clients. They want to get to know them. It is meaningful for institutions like ours to do these types of loans, right? We do have we have to lend within the communities that we serve. That these are attractive businesses for us, right? It's a niche that many banks have. So again, understanding and getting to know and again emphasizing that concept of a relationship is really, really important.
Is there any specific levels that a construction, if we're going to stick just to construction, and maybe I'll ask you this question first. How often is it that a construction company has a relationship with a bank, whether it's a subcontractor or a general contractor?
I think everybody needs a bank, right? We are the you need a financial institution to house, at this point and where we are and how the money system works to house your accounts. So we do bank, and some of these small to regional players bank a ton of folks in the industry. We talked about this before. Construction is just a heavily scrutinized industry, as we know, which is why you play a critical role in the space. There are issues that can arise, and one or two projects, one or two bad decisions can cripple a company. We've seen large general contractors fold rather quickly in tough situations and environments, and we've seen subcontractors thrive, right, in certain environments, and some suffer when push comes to shove. So it's, in general, construction and the way banks approach construction is there's a little higher level of scrutiny.
Yeah.
Okay, So, but that doesn't mean that you can't, it can't be profitable, and it's not a significant part of this world that we live in, right? For my pedigree, my background is commercial real estate, right? And there are so many different players holistically involved in commercial real estate, and construction is a massive component of that, right? So it's a long way of saying that yes, we absolutely approach lending and banking construction related companies, but a little higher level of scrutiny in general.
Yeah, and I think the scrutiny, and the reason I asked that question, I think the scrutiny comes, yes, in the numbers, but you can have two businesses that have these same exact numbers: margin, revenue size, time in business, and everything. One's construction, one is more straightforward industry. Pick one. I don't know. It doesn't matter. The construction one's going to get more scrutiny no matter what.
Sure.
Okay, so it's not all about the numbers, but that's where the relationship and knowing who that person is going to outweigh. Because if you are a construction company and you do have the same numbers and they're good, just like any other industry that would normally fit right in a box and get approved because it's outside construction, the character of the person, how long you've been banging with them, the relationship history is so critical that even if you grew up there and made a bunch of mistakes and got to that same point, you're more bankable and lendable to that bank as a construction company than you would be if you just showed up with perfect numbers.
Yep. No, 100% accurate, and that's what we try to drive home to our people and to our credit officers, is that when you're looking at an opportunity, right, and they appear to be identical in nature, you're comparing two opportunities, but there's not the relationship on one side. Again, numbers look identical, granularity in terms of the concentration, et cetera, but you don't know the people, or there's not a character, that's not part of the equation. You got a problem. So 99.9% of the time, the character situation's going to, it's gonna prevail. So it's a huge issue for us. We try to bank people, not necessarily, clearly numbers are a factor in a credit decision, but the biggest component is that knowledge that the banker has, and painting the picture of how folks perform in tough situations. And again, if you're comparing two deals, and the relationship deal is always going to win.
Yeah,
it's always going to win.
So the common scenario I hear a lot is a construction company come to us and say, "Yeah, I have a bank, but the most they'll give me is a $50,000 line of credit or $100,000. I'm like a $2 million bank or business or a $5 million business. I just can't. It doesn't even. It's a waste of my time." And I always say to them, actually, it's not a waste of your time. Getting a $50,000 line of credit from a bank is a great place to start. Show them how you can use $50,000 and they'll give you $150,000. Show them how you use $150,000 and they'll give you $400,000. And it might take a year or two. It might take a long period of time. But I always give that example because there's certain programs inside the bank that are ways the bank can engage with a company like that, but it's usually a smaller piece, a walk before you run approach. Can you talk about, maybe I'm right, maybe I'm wrong on that approach, or how that can help somebody even when they're thinking, I don't want to do this, not worth my time, I need more, why they should take whatever the bank will offer and then use it properly?
Yeah, I think that's great advice. Starting small is not necessarily a bad thing. It's not a waste of time, right?
Mm-hmm.
When you build rapport with an institution, or even if that may not work out, right, and you graduate to a larger institution or somebody that's more relationship focused, having that history of success, even if it's small, right, it leads to bigger things. And again, banks like ours are looking at history, how you performed, et cetera, when we make informed decisions. So I think it's great advice to start small, not necessarily a waste of time. Use the line of credit for your, in your example appropriately, revolve it, show the institution that, sort of what you're doing and how you're performing as the bank, expected. And then from there, you don't want to say the sky's the limit, but it could lead to certainly much bigger things.
Yeah, it'll never substitute having good numbers and doing what you're supposed to do in your industry.
Sure,
but it's the next piece that'll help you accelerate what otherwise is great that won't get you what you need.
Yeah, I mean, I think starting small is definitely the right approach. Having other means of financing it's fine, it's fantastic, but it's not going to replace how the bank looks at things and that real concrete history that you have with an institution. with the financial institution.
So switching gears now a little bit, let's talk about SBA loans and financing it. And a common misconception is that every SBA loan is the same, number one. And number two is SBA issues the loan. It's the SBA. Can you talk a little bit about that and how an SBA loan is actually done?
Yeah, so there are two style SBA loans. There's the SBA 504, which is real estate secured, where a bank would basically step in and make the senior facility, and the SBA is taking a subordinate facility behind the financial institution, and you can maximize leverage and get higher loan to value, loan to cost when you pursue an SBA 504 loan. But for the majority of kind of folks that are probably listening to this, you're talking about an SBA 7A loan. And 7A loans are very flexible. They're negatively connotated in the sense that you just hear horror stories. You read different things on the internet about the process, and what happens is the SBA provides a guarantee to the financial institution. So it incentivizes the financial institution like ours to go make the loan because they have they have recourse to the government. The process is a little bit more complicated, right? You have to certify to the SBA that you're doing certain things, and I don't want to get into the weeds on exactly how the process works, but they're going to dig into the financials. They're going to dig into the underlying individuals and their financials, their credit, their history, and an SBA loan, a 7A loan, can be very meaningful and appropriate for the right person and the right group. It's not for everybody, but if you're organized, the SBA solution can be a great tool to get max leverage, to get from the bank standpoint, a traditional small business loan, the bank a bank may require terms that are a little bit more conservative than the SBA would require. The SBA can offer more competitive solutions in terms of leverage, in terms of how much you're borrowing versus if you're 70% loan to cost, or your advance ratio is a little lower from a traditional bank standpoint, you might get more aggressive financing from the SBA if you can go through that process. So it's a long way of saying it can be a great solution, and banks like ours offer SBA solutions that for clients that many people that might be listening to this.
Does the SBA make the actual decision and then inform the bank, or does the bank make the decision and then inform the SBA?
A little bit of both. Most institutions are qualified with the SBA, so they basically have a direct line to exactly what the SBA is going to require. So if the bank approves it, the SBA effectively approves it. So it's sort of one and the same.
Okay.
Yes. So 9 times out of 10, financial institutions are, again, like ours, are really acting on behalf of the SBA. So there are a series of checks and balances, but yes, it's sort of simultaneously done.
And is it possible for a company to get it denied for an SBA loan from one person, maybe as a broker of sorts or consultant of sorts they're working with, and then get approved by a bank or a different consultant or broker?
There are examples of that, and again, it's getting into the weeds, right? I mean, it's understanding what the SBA and your direct line to the SBA. But yeah, there are examples of that. I mean, I would recommend that if an individual or group is pursuing an SBA opportunity, that they're dealing with a reputable source. There are a lot of brokers out there that may, they may be outlining certain things that may not be fully true.
Yeah.
So you want to deal with the bank or a liaison that really is reputable.
Do you have any recommendations on questions that someone could ask if they're working with a broker? Maybe they like the broker, or maybe the broker's just new. Maybe they're not unscrupulous, they just don't know. Are there any good questions that they should be asking the people that they're working with that would kind of be good indicators of whether they're good or not?
I think it's really just dealing with experts in their crafts and the experience that they have when it comes to SBA lending, because it's a nuanced style lending. There's a lot to it, and you want to make sure that that individual, that liaison, understands the process, and clearly they should if they're pitching SBA routes.
Yeah.
And then the industry itself, because this is a nuanced industry, right? Construction's a lot different than other industries, so you just need to make sure that that broker or that banker really understands the industry so that they can paint the picture.
It's interesting because the advice we give a lot, and it happens a lot with accounting, like picking your accountant. We always say, make sure you go to a construction-focused accounting firm, or you're working with the construction-focused accountant, CPA in the firm, because doing your accounting is not the same as doing your taxes. Setting up your books is not the same as just setting up your books. A restaurant will set it up differently than construction, how you recognize revenue, when you do, particularly for bonding. But anything as it relates to bonding, those same setups are even more critical for when you're trying to get banking. So I think it's really critical to do that. And it sounds like working with your banker or working with your lender, it's similar advice. Find someone that understands construction, can present construction-related deals to the bank or to a bank.
Absolutely, and it goes with every third party or advisor. From a legal standpoint, if you have an attorney that doesn't understand lien law, and it's specifically Florida lien law, that's a problem, right?
It's a big problem.
So again, I think it's really important. Again, in any third party or advisor that you're dealing with, that they understand your business.
So, so someone's coming into the bank, all right, and not every bank's the same, but also not every banker's the same, all right. So how can someone figure out, like, okay, I watched this, Vince gave great advice, I'm going to go into the bank now, and I'm going to get a relationship with my banker. And they walk into the lobby, and they wait for the person to come out of some little cube with glass around it, or maybe the teller comes, maybe they go to the teller window first. Like, what is the way they should go about engaging in the bank to get to the right person? And then what questions can they ask to make sure they actually are with the right person, not only at the bank, but with the right bank?
Yeah, my approach would be to really link up with the commercial side of the institution. The branch does a great job in terms of trying to find a home, versus that example of somebody that's just walking in off the street. But the commercial bank is such a unique thing. I mean, when I was younger, I thought banks just did HELOCs and housed your deposits, right? And there's just so much more to it. So it's really getting linked up with the right banker and relationship manager. Typically that's done by the revenue size of your business, and small business would typically cut off at, call it, 25 million in revenue. So that's a huge chunk of businesses, and they're not necessarily small. That's just how a bank might define small business. And then there's middle market lending, which is kind of 25 to 100, maybe 125 million. And then there's corporate banking, which is the big stuff, right? So it's really finding the banker based on revenue size, and then you sort of segment out from there, right? So you may be a small business banker, but some banks may have a construction division that specifically focuses on the construction-related industry, and they'll have bankers that have a ton of reps in that space. We don't necessarily have that definition per se, but we have bankers that again, they wear a lot of different hats from a small business perspective, but they have a lot of experience lending to contractors and subcontractors in this space. So you want to make sure that it's a combination of the research that the client, that the customer is doing, and then the bank is actually linking you up with sort of the right team based on the situation. So it's not really a great answer to your question, because there's no perfect way to do it. But I think doing a little research on who is active in what community, what banks are doing, certain style deals is important. And then from there, once you get linked up with the right institution, hopefully you can find the right banker.
Yeah. Well, I'll share with you the advice that I typically give someone, and you can tell me if this works or not. I said, if you're walking into a branch and you're trying to find the right banker, you probably have a very low success rate of finding that banker, because it's just a difficult path. the best choice is work your networks. Find someone in your network that's maybe a little larger than you, maybe same size, different scope of work, maybe in a different, maybe they might be in an entirely different state, but they work with a similar bank, and you get a relationship started by getting introduced from to someone who has a great relationship with a banker is going to be a great way for you to get introduced to a banker. And even if they can't help you, they'll link you to that equivalent person. And now you have a nice email introduction, and then you can make a meeting, and you can still might walk into the bank, but that's the best way to go about doing it.
I love that. I think that's exactly right. When you have a soft intro or somebody that may be a liaison between the two parties that can vouch for somebody, their character, or it's a referral from somebody that you can ultimately qualify, it's going to get a lot more attention than somebody that's just randomly coming in off the street.
Yeah.
Now again, it doesn't mean that you can't be successful in pursuing banking related activity and financing by just if you don't know where to start, that's a okay way to start. But the success rate is much more predictable if you have a soft intro. And the CPAs, the legal counsel, folks like you, bankers will pay a lot more attention if they're getting the referral from a trusted source. Yeah. And again, I think it enhances your your ability to be successful and ultimately get what you need from the institution.
Yeah. And I always say it takes effort. Like, you're going to have to put in a lot of effort. The things that are, if it's too easy, it might not be the best for you, right? And so, like, if it takes a lot of effort to make these phone calls and find a couple people, sit down with 3 or 4 different banks and maybe 2 or 3 different bankers at each one, ultimately at the end, when you land in the right spot, you'll be proud and happy that you made that effort, because when you do sit in the right spot, you'll know it. Now, for example, if you're listening to this and you're with your bank and you're annoyed with the bank and you don't feel like they're helping you, you probably just got to that bank and sort of just fumbled along through the process that the bank probably might have dictated. And so that's the kind of difference that I'm talking about, is if you can orchestrate that yourself. And when you started, you probably are different than you are now. So, like, it's good to branch out and take yourself. If you just started with a deposit relationship and you don't have any lending relationship and the bank won't help you, it doesn't mean you're stuck there. It doesn't mean that bank won't. It doesn't mean no banks will help you. It just means that bank won't. And we see this a lot with, we'll pick on some of the bigger banks and just use PPP, since we talked about that. You could been with those banks forever, but if you were under a certain dollar threshold in revenue, or you didn't have a business banker, you were just a branch relationship deposit, despite being maybe a $20 million business, you couldn't get a PPP loan. You couldn't even get someone to pick up a phone. And so the lending relationship is very analogous to the PPP relationship. If it was hard for you to get a PPP loan with the bank you were with, it's probably going to be hard for you to get any relationship with them.
Precisely. Yep. Yeah. So, and again, it just sort of is the same theme that you've sort of been driving home. It's the relationship.
Yeah.
Right. It's in any business, but in particular, it's really important from a banking standpoint, holistically.
So we've talked about a lot of things that are related to the bank, but is there anything that you wish, like, of all the things about the bank, is there anything you wish certain customers or just certain people knew about the bank that are pretty obvious to you working in the bank, but just are not obvious outside for anyone outside, that, like, if they could just say, hey, I just wish people knew these 1 or 2 things about a bank, it would make their life a lot easier? Is there anything you could offer there?
Yeah, I think what is a misconception is that we're lenders. We're lenders only. We're bankers, so we have to have a well-rounded approach to banking. If your client comes to us, or you come to us and just say, I need a ton of lending need, but I'm going to keep my accounts at Bank of America or Wells Fargo, it doesn't really help us, right? So, and it's easy, we're all classically trained finance guys that want to analyze risk and understand how cash flows work, and it's a complicated analysis, but what's really simple is the kind of the deposit piece of things. And so you have to have a well-rounded relationship with a bank in order to get their attention, right? So you have to bank with them. Many banks have other products and services outside of traditional banking, like our bank, for instance, at the holding company level. We own an insurance company, we have a private bank, we have a trust department, we have an equipment finance division. So there's a lot of things that the bank does that can help drive revenue for the institution so that we can really justify doing lending. And it's tricky for us to just lend without the treasury related relationship. So it's really important for financial institutions to have that sort of well-rounded relationship, not just a one-way street in terms of, hey, I need a loan.
Yeah.
Can you do it as quickly as possible for as cheap as possible? The other thing that I would say is that, banks really, we're analyzing the way that we make money, right? So if you just want something super aggressive and super cheap, it doesn't really get our attention. If somebody's calling and saying, hey, look, I'm bidding out this transaction, I need a small business owner-occupied real estate loan, and I want to get your bid. What's your rate, and what's your leverage point? That's not going to get your banker's attention, right? If you really want the banker to add value and provide advice and be that connector and individual that's going to help give you advice on how you should do things and approach things and really understand your business so they can add value from various standpoints, then that's kind of the way that we like to approach things, because it helps us, and we can figure out ways to make you more bankable and ultimately make money for the institution while protecting itself.
Yeah, it's weird, but focusing only on price or cost, I always think it's a big misstep in any transaction. Specifically, banking is one of them. Getting a loan, even buying a car. We talk about it all the time. Just like, if you're only focused on cost and you get into the wrong relationship that has the wrong covenants attached to it or the wrong stipulations to what you can do and can't do with the rest of your receivables, or like whether you have a term loan or a factoring loan or us or a regular bank or an SBA versus something else, like you can have significant limitations that you'd be happy to pay an extra 0.5%, 2% even for an annualized interest rate if you had only known that was there, right? And so it's those little things that you should be aware of or ask about too, other than just cost.
I think you hit the nail on the head.
Yeah.
When a difficult situation arises, when you're up for maturity and the bank just decides, we're really not in the industry anymore, or you trip a covenant and it's a technical default versus a material default. It's a construction draw where you might be waiting on one lien waiver and the bank's like, sorry, I'm not going to fund it for you. That's the value, right? The value of knowing your banker, understanding the relationship, because when you're getting the most attractive terms, the cheapest rate, the most aggressive financing leverage point, whatever it is, right? Like, there's not a whole lot of wiggle room.
Right.
But if you're approaching it with the tailor-made kind of community banking approach, and your banker, and they know how to be reasonable when life happens. That's why it's important to really understand who you're doing business with.
Yeah.
And all those examples that I described, we deal with them daily. And we hear horror stories about the money center banks, literally not funding a draw because of one lien waiver that, might delay a project 90 or 120 days.
Yeah.
Right? But it's immaterial. But that's what the loan documents say.
Yeah.
So unfortunately, if you don't adhere to that, they don't have to do anything.
Yeah.
If you're in technical default, they could call, your loan could get called. And there's all sorts of ways to, there's ways to weave around documents, and you got to know who you're doing business with. So if somebody's going to act reasonably when certain things happen, that's who you want to be doing business with.
So you bring up a good point. Something we always talk about and hear a lot about is like the construction projects going on the street. There's a big sign out that says proudly financed by such and such bank, and there's a draw process, right? And like work's getting done, and I think at this point everybody knows that work is being done, people are spending cost and then being reimbursed for it. I mean, it's just the way construction is. You and I aren't going to solve that, right? But how can a subcontractor who's putting a lot of money out and submitting it to their general contractor, and then ultimately they're going to the bank, they're going to the owner's going to the bank, and it's just trickling its way down. Is there any advice you could offer to those subcontractors, and even the general contractor, but really subcontractors that are doing a lot of the work they could do to put themselves in the best position, whether it's analyze the GC up front, whether it's analyzing projects, paperwork and documentation, and anything that you see as it goes from them to a GC party to an owner and then ultimately to you. Like, you see those subcontractor draws, you see how it goes. What is any advice you can offer them to help best make it work?
Yeah, I think it's really know who you're doing business with, because if you have a developer or GC that's not organized or doing what they're supposed to do, it's a trickle-down effect. So I think it's important for the sub or the GC to really understand the bigger picture on the project. Is it a viable project? What the construction process looks like, what municipality or the state that you're in is very important. And again, the subs and the GC are subject to a whole lot of things that the developer owner have to do. And the bank is, they're the keys, they're holding the keys to the castle. They're the man with the gold really makes the rules. So until you get what you need, the bank's not going to fund the draw, and then the underlying individuals aren't going to get paid. So a lot of times general contractors will have means or stop lines of credit to sort of fund those gap situations. A lot of times they don't.
Right.
So it's really understanding who you're doing business with in the form of the underlying developer, and in many cases the GC, and the bank that's ultimately funding it. Because sometimes the bank may have everything they need, they just only fund once a month or only fund every 6 weeks, and that's just the process. So understanding what you're bidding on and seeing the grander picture versus just, I'm going to make a fat margin on this particular project, because a couple bad deals could really put a hurting on a sub.
So if a project gets over budget, which I'm sure they do all the time, does the bank just lend more?
Typically, no. Typically what happens is there's a right sizing provision, and again, it's all a function, it depends on the situation, right? So there may be a situation where the bank could consider lending more, or the fundamentals of the deal have changed, but a lot of times it's on the developer to fund that gap. In many cases, banks can get creative and they can reallocate line items if you're saving on certain costs, but you're over on other costs, and that's something the bank can consider, but they don't have to do it.
Right.
And it's all a function of knowing who you're doing business with and being reasonable. We obviously, if we're dealing with developers that we trust and we know, we'll absolutely consider that, and we do that in many cases. And in some cases, we will fund above and beyond what the budget allows, because we trust the folks that are involved. But many banks won't, and they'll put it on the developer to right size, and then we're at a standstill until that point.
Yeah.
So again, it depends on the situation.
How often do you see subcontractors actually doing work on a project before you've closed the bank loan on the project?
I mean, I'd say it's becoming more prevalent. We're seeing it, but it's mostly it's site work, it's things of that nature. There's not a lot of subs that are really humming until there's a capital stack that's really balanced.
Yeah.
And it doesn't mean that can't always, there are examples certainly, but the lion's share of the projects that we finance, everybody really waits till the bank financing's in place, or the financing's in place.
So a lot of our contractors that come to us are in the site work space. They're in the dirt world. Matter of fact, we went to a summit last October, put on called the Dirt World Summit, and they talked about that. They talked about knowing whether or not the bank's financing, and they had a raise of hands how many folks knew that they're actually doing work prior to, or do they not wait to start work when they know the financing's in place? And they all assume that when they get their notice to owner to get started, that bank financing's in place. And they were shocked to find out that it's not. Very often, sometimes not. Is there anything that those subcontractors in the dirt world can do on their own to easily figure out if you guys are in place yet and the loan's closed?
Yeah, so I think in the instance of site contractors and folks that are doing a lot of infrastructure related work, it's interesting, especially in this environment where financing and loan to value, loan to cost thresholds have come down. So where traditionally 70, 75, 80% financing used to take place, right? So meaning that if a project costs $100 million, the bank would lend 80, but the equity would have to go in and we have to certify that it was spent prior to the bank funding the loan. In this environment, 55, 60% loan to cost, loan to value is not uncommon. So there's a ton of equity that needs to be spent prior to the bank funding its first draw. So that's a way of saying that in this environment, specifically for those types of subcontractors, site work, etc., it probably is not uncommon to see those folks get in a job before financing is in place because there's so much equity to burn through. Now, as a prudent measure, you would think that somebody would want to certify the capital stack or know that they have enough money to complete the project prior to engaging or having somebody really commence work. But given the environment and the level of equity that's required in this environment, I could see why certain subs would start prior to the capital stack being balanced and bank financing being in place, because the loan to cost is so much lower than it has been in the past.
Yeah, and see, if someone gave me that answer as a site contractor and knew that and explained the work environment, I'd say go for it because you're aware of the risk. If you're starting but you don't know any of that, you're just doing it the way you've always done it, you can see now how you're actually taking more risk today versus you might be taking 5 years ago.
Right, absolutely. And
so
you
it's
would
just important to know that.
Yeah, I mean, you would think those folks would get paid out and it all be in that sort of equity figure, but who knows, right?
Yeah.
I mean, it all depends on the project, but you really, and again, it just goes back to the point, you want to understand the bigger picture on the project that you're bidding on or getting involved with, because it's important.
And you can always do searches on the property too. I mean, you obviously are going to file the proper documentation that you have a lien against that property as the bank, so you can easily see public record searches to
Sure.
give you a good indication of who's there, what's there, if things are in place and closed. Those can be something that's easily searchable as well, right?
Yes,
Yeah.
it can. Yeah, it's all public record for the most part.
All right, so switching gears on you now one more time. Last year, Silicon Valley Bank collapsed, right? And the buzz around the banking world and deposits and relationships and just again that feeling of 2008 was there for a second and maybe kind of talked about. Tell everybody how can a bank collapse? Like, how does something like that even happen?
Yeah, so you mentioned Silicon Valley Bank, and there was First Republic, and there was also Signature Bank. So there's really the three situations that took place last year that made 2023 a very interesting year.
I assume that made your life easier.
Yeah, exactly. No, it last year, especially this time last year, was very, very challenging time for banks. And this concept of a bank run, right, where people are effectively pulling their deposits from a financial institution in an expedited manner, which creates turmoil, right? So I want to say that those three banks, in whatever order, I think Republic, SVB, and Signature were the second, third, and fourth biggest bank failures in history, and they all took place one after the other. And I think it highlights the how volatile the industry is. Those institutions, and in particular Silicon Valley Bank, that was mismanagement of their balance sheet, right? They were a financial institution that focused on the tech-related industries out in California for the most part. They had a ton of uninsured deposits, and what they were doing is they had a swell of deposits, and the bank grew exponentially in a short period of time. It was a little bank that became a $200+ billion bank in 2 or 3 years, very, very quickly, all focused on one industry or set of industries. And they had a ton of deposits that were lumpy, not granular. And they basically were buying long-term treasuries. And when rates shot up, they basically had a mark to market on their treasuries, which created a ton of turmoil. So when people started moving their deposits out of the institution, they were forced to sell treasuries at a loss, and it created a mismatch, right? So the bank effectively, it had nothing, that particular bank issue had nothing to do with making bad loans. Now, their risk practices were probably okay, but the way they managed their balance sheet wasn't okay. Now, and they were focused on a specific niche. So that example is just one that, if you are niche-y and you mismanage your balance sheet, it could create a ton of turmoil. But other institutions, now you hear about New York Community Bank, and they're real estate concentrated and focused in a particular geography, that's New York, New Jersey, that's experiencing some drama. So it exposes these financial institutions, and that's why we are heavily regulated. We're scrutinized from every different angle. So banks have we have a little bit of a thankless job, so we just can't take a ton of risk. But in general, I think that situation exposes some of the turmoil in the industry.
Sweet. So you guys have had a lending relationship now with Mobilization Funding and us for 6 years now. We've had a banking relationship for about 8 years. The journey that you and I talked about of getting a bank and working with a bank, is very synonymous to what we did. We had bank deposits, our own first, and then accounts that anyone listens to us now knows we open accounts for our customers. But one question we're asked a lot is, why can Valley give you a loan to make loans to us, but they won't just make loans to us directly? What do you guys do? Why do they do that with you, but they won't do it with us, even in the same manner?
Yeah, I think your business provides a pretty interesting solution for the folks that you do business with, right? It makes a ton of sense. And as you described, there's been an evolution with us, right? You started out small. We increased the line of credit. We got comfortable with the people involved in the systems and the processes, and you really have done a great job of analyzing risk and explaining your business and the risks in the industry to us. And you've sort of tweaked and fine-tuned to the point where we're more comfortable and we're able to extend more credit. And again, I think the concept of us lending money to somebody like you, who's in turn going to lend money to your underlying clients, is it's part of the evolution graduating to a financial institution, right? Like you've done the homework. You know the industry better than certainly than we do, right? So we're lending to Mobilization Funding, and the individual is the expert in the space, right? So it's the same concept as we talked about before, is knowing the people and the character piece. Like if there's an issue, or you have a couple loans that may not perform as you expected, you have plenty that do, and you have somebody that is going to stand behind it and work through the problems if there's an issue. So I think that's critically important. But again, somebody that is going through the process of the evolution of becoming quote unquote financeable by a financial institution, it's not inappropriate for them to borrow money from somebody like you guys, and perform and show that they can pay back an obligation, and then again you can say, look, I've done seven deals with these guys over the course of the last couple of years, and their numbers really look strong, and they've been, they've performed and done exactly what they said, and it's a soft referral to us.
Yeah. So and you can see the banking relationship, the deposit account is there from them. We tell the people all the time, is we send a lot of people through the program to all different sizes and growth, but a lot of them ultimately sometimes end up right with you all in a normal relationship, and that's sort of, we call it graduating away from MF, but sometimes it's graduating into a new facility with the bank, but also then using us adjunctively as you get through the next growth phase. And it's just it provides that visibility. But the system and the process is the same. That's what I think is important. That's why I wanted to ask that question. Is what you described in the first part of this entire discussion is also exactly the process that follows with us. We just help provide a little more structure around it, but then you can funnel it directly into the bank.
Yeah, I mean, you're instilling a certain set of discipline for your clients, right? Mm-hmm. And some of them already have it. Others, they need your best practices in order to get there. But I mean, in many cases, you're doing more detailed analysis than we are. So somebody's, it's like a college prep school. Like those kids get out of school, they're like, well, college is now hard. Yeah, because they're ready for the big leagues. So I think some of the things and practices that you pursue will certainly get them ready for the next step. Yep.
So 𝗕● recently has made some changes directly, the way you guys have structured the bank and organized your, what I like to call like presentation to the community or the customer, right? Can you talk a little bit about those and why did the bank make those changes?
Yeah, so 𝗕● we're effectively a 100-year-old bank, based in New Jersey, we just moved to Morristown. We were in Wayne for a long time, and kind of plain vanilla, simple commercial institution. I talked about some of the businesses that we have at the holding company level, but we're a commercial bank, right? And we have branches, and we are about $70 billion. So 100-year-old, $70 billion publicly traded bank. So not really that, not really that fun to talk about, but we have forever and ever been segmented by business lines. So commercial real estate was a business line holistically. C&I was a business line. Specialty finance was a business line. And again, that was a vertical throughout the institution. And it's good for regional banks to sort of have that consistency and that predictability and those best practices when it comes to that space, but it doesn't necessarily drive business. So we're about relationships. We kind of talked about emphasizing the point and driving the point home about relationships. So we thought that in order to enhance some of those relationships and kind of immerse yourself in the subculture of different geographies, that we'd go to a regionalized model. So now we have 5 sub-regions and then kind of a specialty division, and that those regions are defined specifically by geography. So there's West Florida. So I'm the chief banking officer of West Florida, which is defined as kind of Tampa Bay, which is our 4 or 5 counties that includes Lakeland and some parts of Orlando, all the way down to Naples and everywhere in between. And that is what we consider West Florida. Then there's East Florida, which is like South Florida proper, and then that's a region. And then there's emerging markets, which is parts of North Florida and Alabama and Chicago out to California. So those are our emerging markets. And then we have 2 distinct markets up in the Mid-Atlantic. We have New York, which is a distinct market, and New Jersey, which is a distinct market. So we thought that having sort of community banks that had the infrastructure of a large bank, we had autonomy to make decisions, big decisions, $50 million decisions, credit decisions locally was pretty important. So we're kind of like, the way I think about it is like running a little bank within a larger institution and having the bells and whistles and infrastructure of a big bank, but having the service, tailor-made solutions, and kind of white glove service that a small bank would have. So that's why we've shifted.
Yeah, and if you can make those kind of decisions inside the market, you can keep the relationships inside the market. Or if you're engaging with the bank, the relationship you have can stay within a contained system that actually can do real dollar volume of options and finality. And then I assume you can link into every one of the products. Is that also, like, if it's finance, you don't have to go to this other person. You can work with one person that can plug into all aspects.
So yeah, you're dealing with your banker. So I mean, again, it's more of a regionalized approach, and we know the people in this community. It's all about relationships, right? So that's the reason that I'm tasked with helping what's West Florida is because this is where I live, and it's my community, and it's what I'm most familiar with. And same with each of the regions, the distinct regions that we have, is we have bankers and people that are really plugged into with what's going on within those pockets.
That's cool.
Yeah.
Well, look, I want to tell you our experience and what we're trying to do, which obviously is way outside the normal of what someone would try to do to plug into a bank, and we had our own issues and problems trying to find even a banking relationship before we ultimately got together. It is hard, and so it's very analogous to the customers that we serve, and I talk about that all the time, and I just appreciate you coming in and let me ask you some of these questions and give some of that insight. And despite me knowing that, I think it's good for people to hear it directly from the source, someone that is making $50 million business decisions and have a huge team underneath them, and you've also watched it be made, and you've had to take your decisions, are bigger even, into the corporate part of the bank. So it is really, it's complex and as intimidating as it seems. I think the way you described it really boils down to the basics. Build a relationship, do your part, let time. That's the other thing. Like, time is part of the equation. Like, you can't skip time.
Yeah.
It's definitely part of the math.
Yeah, I mean, it's really not that complicated, right? And it shouldn't be a scary thing to the concept of approaching a bank, right? It's start small, develop a relationship, and then see where it goes. Yeah. It may not be the right bank, but find the right bank, find the right banker, and have somebody vouch for you and understand you and your business and the way you do things and your character, and that's gonna solve itself.
And I think the takeaway from that is, somebody might think, what, I'm too small. I'm a waste of the bank's time if bringing it to them now. But the reality is, it's actually the opposite of that. You'd rather work with somebody from the beginning and add a relationship than you would try to bring somebody. I imagine it's much more intimidating to have somebody come to you and ask for $50 million than it would be to have somebody come and ask for $100,000 or $500,000, and then 4 years later ask you for $50 million. Right. And so that part of the process where you're just trying to start small and think you're not worth it is not really the truth. You're actually worth it when you're small.
Yep.
You can be more detrimental. All right. So
agreed.
I have 3 quick questions for you before we wrap this up. All right. What's the best advice you've ever received?
That's a tough one. I'd say the concept of not, it's okay to not know. A lot of times people tap dance around certain issues, or they say they understand something. I think it's better to say no and get back to somebody than try to explore a concept you have no clue what it is. So as I grow in my career, I think it's important to know and realize what you don't know.
Yeah.
And I think setting expectations. A quick no is better than a long drawn out no. So it's sort of like the setting expectations and understanding hot buttons are really important.
What's your favorite business related book?
Another tough one. Well, I'll tell you that I just bought the Elon Musk book. It's the Walter Isaacson. It's a big fat book, and I'm probably almost halfway through it. It's an amazing book. If you haven't read it, it's really cool. But I do like the kind of the old school finance books and leadership style books. I like the Power of Habit, which is a newer book, and you and I both, I think, probably have some habits that translate to success. Just the way that we approach life, and having a predictable pattern, and how that translates to the way that you approach things. So, and I think that starts with kind of seizing the day early and getting up and doing some stuff that's probably a little bit uncomfortable early.
Yeah, I always tell people, if you work out with somebody, you'll get a good indication of who they're going to be. And so I always feel pretty comfortable knowing you and how you work out. How you go about working out is definitely a good indicator of how you might hope someone fights for you, or what kind of energy do they have? Do they have any way to, like, are they just gonna quit? Like, just getting up to work out is one thing, but there's people that I see in that gym that I would roll with all the time, and there's other people I wouldn't want to do any business with, and they get up there every day at 6, but I just know that they're gonna quit the second it gets hard, and that's like something to learn too. So
yeah, I mean, it's like going.
It's not you
going through the motions is. I mean, if you're there, you might as well give it your all. And I think so. I have to give you a little bit of credit. I certainly look up to the way you obviously work out, the way you are with your family and kids. But in particular, the game changer, cold tub pre-workout that's brutal. But once you're out, you're everything's downhill from there.
That's right.
So
it's a good start.
You are you're an inspiration to me from that standpoint. So I definitely look up to you. But yeah, it's fun doing that type of stuff with you. But I do like a routine, and I like I like that kind of habitual set of activities. Not to the point where it takes over your life, but just to keep you accountable.
Yeah, I agree. And obviously Dylan and Brian came in here. We work at the same place. They were on the podcast episode.
Oh, nice.
And they they give a good indication. Like, you don't have to make it hard. It's not like you got to go do some amazing, crazy CrossFit, or you don't have to do figure out all the weights in the world and work out for 15 hours. I mean, we go in and you hammer it hard you warm up and hammer it hard for 45 minutes, and you start and end within an hour, and you get after your day.
Yeah.
That's it. Bring your girls to school. We both have 3 girls. That's another commonality.
Mm-hmm. Yeah.
I'm going to tell you, we have one of my buddies who Kevin Burns, told me, I'm going to work out, Scott, until your kids are teenagers. As no matter what, I want to see you suffer. And so I don't want to see you suffer, but I'm definitely going to be enjoying as mine are moving out. I guess I'm probably 6 years ahead of you, each one.
Yeah.
So I'm 17, 15, 13, and you're at like 12, 10, and 8.
Yeah, we're 10, 8, and 6.
10, 8, and 6.
So we're just a little bit behind you, but I'm already feeling some of the wrath of the girl atmosphere. So
yeah, I'm in a phase that I never thought was gonna. It's interesting right now. This window of time. I talk about it all the time in here, because half the time, depending on what happens in the morning, I'll come in here with it on my face. But it's fun. But it doesn't get easier. It's different hard.
Yeah,
it's not harder. It's different hard.
Yeah, I can't wait. Can't wait.
Last one. What's the most underrated skill in your industry?
I think listening.
Yeah.
I think just listening and taking it all in. We talked about not being a know-it-all, or not trying to explore something you have no clue about. I'm okay knowing what I don't know, but I think a really important factor is listening and understanding before being a arrogant, loud voice, right? Can't emphasize enough the concept of a relationship and really understanding somebody's business and getting to know somebody. So in banking, and probably in life and in any industry, it's being thoughtful and listening.
Yeah.
And then understanding and trying to, from there, taking it all in and figuring out what the next steps are, if it's adding value or whatever it may be. But you have to listen and understand before you can do anything.
I agree with you on that. That is a great one. So how can people find you? I love listening to Vince. Scott, thanks for having me on here. How do I find Vince?
Yeah, so I historically have not been a self-promoter. I haven't been on LinkedIn. People just know where to find me, but I have graduated and I'm now a LinkedIn member. You can find me on LinkedIn. I'm easy to get a hold of. Sell my email and obviously our bank. We're kind of everywhere, and so I am happy to try to add value and have my team members add value to any of your clients, and obviously to you guys. So we're VLY ticker symbol, and my email. I'm sure you can share.
We'll put all your stuff in the show notes
with the team, but there is no nobody's bothering us or me. It's what we do. We take calls and feedback from folks all the time. So don't be afraid to reach out.
Okay, well, maybe we can help you build your LinkedIn network today.
Yeah, you need to.
A bunch of people can click on there. Hey, and I know the journey well. I had 500 members that were made up of the medical device industry 4 years ago.
Wow.
And
now you're like a serial link. Yeah, you're
now I'm
like
on
the biggest
LinkedIn
guy.
because for a lot of reasons which don't even matter at this point. But yeah, it doesn't take long, and there's a ton of value in LinkedIn. I would tell you that I was very shocked, and you'll find good value in there if you use it the right way.
Yep.
It's cool.
But I'm easy to get a hold of, LinkedIn or otherwise, the traditional methods.
Well, dude, I appreciate you coming in very much. Thank you for all the stuff you've done for us, for sharing this information. I think this is great. I would challenge everybody to go back and listen to this and pull the nuggets out. So thank you for coming in.
Appreciate it. Yeah, I encourage all your team members to meet bankers and really get to know the business.
Awesome. Well, folks, that's a wrap for us. I hope you guys enjoyed this. Please go back and listen to this. Grab these nuggets out. We are asked more questions about banking, how to engage banking, how to get what you want there, and also frustration about it. So I think Vince shared very candid and open information with you guys today. Share it with your friends, pass it on, and I wish you all a great week. Thank you very much, and God bless you. Take care.